Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, keep in mind that there's risk involved with each trade that you take, so you want to make sure you're managing risk in a way that makes sense for you. And we'll go over some ideas in that regard as well. There are some tools built into our web trader and app that make the risk management side of things quite a bit simpler. Also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our web trader platform, which allows you to trade on both the MT4 and MT5 accounts from the same location, but with advanced tools such as our free signals, the market buzz, the economic calendar, etc., right there to use as you place your trades. Now, our mobile app has the same functionalities, so you can get that from your app store and utilize the same tools that we're about to go over within the web trader platform within this session. So if we log in here in the upper right hand corner, we'll be in the web trader platform. And before we jump into the technical tools that can assist you with your trading on the platform, we should talk a little bit about what's happening fundamentally, just to get an idea of where the sentiment maybe lies. Which way the wind is blowing, so to speak, before we dig into the technical movements on the charts. Now, it's kind of a wait and see a little bit with a couple different storylines. One bit of data that we know up front is the advanced data payroll out of the US, which is kind of predictive for the non-farm payroll numbers that are expected Friday. The numbers came in way below expectation, so perhaps there's a slowdown in the hiring in the U.S. We'll see. That was for the private hiring, and with all the government cutbacks that have been going on in the U.S., I doubt the carryover with government hiring would make up much of that difference. So we'll see how predictive those numbers are for the actual non-farm payroll that comes out on Friday, but the numbers today gave a peak that was a bit disappointing, and the market's pulled down a bit temporarily, but then seemed to bounce back up. Now, some of the other news that we're kind of in wait and see on, the tariff situation with the US and other countries around the world. The Trump administration announced that they wanted every country's best offer today. Or else the next steps will be taken to implement further tariff collection on various countries. And so we'll see what happens. Maybe there's some anticipation. I saw some headlines about optimism that maybe some trade deals will be announced. That could go either way. So there's no guarantee whether there's going to be good news or bad news in that regard. So that's something to keep in mind as you do your technical analysis. That maybe you're waiting for some breakthrough movements on whichever way the news breaks, then the support or resistance levels may break in a particular direction with momentum. So if we find ranging patterns, maybe we try a breakout strategy, waiting on the bigger news to hit. And the other news maybe that some are waiting on is what might happen with the US/Israel-Iran situation. Iran's supreme leader officially said that they reject the U.S. Proposal for a nuclear deal in terms of nuclear enrichment or not nuclear enrichment in Iran, and sanctions or not sanctions on Iran. And it seems like there's no deal. And some of the threats made from the U.S. side was that if they don't accept the deal, then there could be really bad consequences. Perhaps even militarily. So we'll see if there's any follow through on that, and if so, when. So these are two kind of big stories that are out there. I think we might hear more immediate news in terms of the tariffs, and who knows when you could see news with regard to the other storyline. So those things are out there fundamentally right now, and we've seen kind of a jittery type movement in the markets, I think, because of those storylines. And so, the news was more negative than positive with the actual data that came out, especially out of the US with the early jobs data. And then we've got the anticipation of the unknown with these other big stories. And so a lot of times when there's fear of the unknown, it causes more negative movement than positive. But let's take a look at the charts and we'll see. And we could start out with the signals that are out there on various instruments. Gold really was trying to make a move down, and then it made a move back up. If we take a look at gold, we've got a signal out on gold out of Trading Central. And if we click on that signal here within the platform, what we see is the expectation is gold may continue to push up. Makes sense if there's more fear than optimism. Negative jobs data and the rejection of a deal from Iran with the US. Those are two negative storylines there, and then kind of wait and see on the tariffs creates nervousness. So it makes sense that a safe haven like gold might, at least in the short term, have a prediction of a climb. And we see the breakthrough of the resistance line here that's drawn within the signal. So from a technical sense, we see resistance, ranging, and then a breakthrough of the resistance, and then a pullback with that resistance level now appearing to hold as support. So a buy signal with take profit up at 33.92 or higher is what we see from this signal. So if we start to break down the chart, then we can take a look maybe at 4-hour candles and see if we can line up these price levels with what we see on the charts. So if we look for resistance on the 4-hour candles, I see resistance maybe starting here with the first spot on the 4-hour candles. If we want to look sooner, we see here. So first spot actually more recent, around 33.93. And if we take a look at the take profit here, that makes sense then that the first take profit suggestion is at 33.92. Okay, just before this resistance on the 4-hour candles. And then if we want to look higher, where are the next resistance levels? We see here and here, if you're looking for a larger move on gold. But the current short-term move is going with the current momentum and technical move with the broken resistance here on this daily view and open clear sailing up to 33.93 or so before it hits the resistance on the 4-hour candles. So if I'm going to act on this and go with the current jitters that seem to be in the market, with the negative data out of the US on the early jobs data and fear about are there war drums starting to beat more with the Iran situation, and who knows what the next headline might be on tariffs. If you're going with that type of fear, then we look for this buy signal maybe to follow that from Trading Central. And so take profit, we've got our options. The short-term signal from Trading Central says around 33.92. I see resistance closer to 33.93 and a half. So if I'm going to do a take profit, 33.92 seems to make sense. It's before that resistance. Stop loss, I would probably put my stop loss back down below this breakthrough point here. Okay, in the signal, we saw that this was resistance and that we broke through that and it came back down to that resistance here. And it could make sense to say, well, my stop loss should probably be back down below this resistance here. So it would have to come back down below this, what should act as support right now, before it would hit my stop loss. So about 33.60 could make sense from a technical perspective for my stop loss. Okay, that gets me below this old resistance level, which should act as support, and this old resistance level, which should act as support with my stop loss. And so 33.60, and if I'm looking at take profit, 33.92, it looks like that sets me up with a better potential profit, 4,600 plus, compared to risk, 3,300 plus. Okay, so about $1,300 or a little more than that, larger potential profit than risk. And it's changing by the second because the charts are moving as we're looking at this. So I can take a look then and say, if I want to risk a certain amount, let me change the trade size with this setup. and I can see I'm risking 1,200 with one lot. Maybe I want to risk, I don't know, 500 per trade or whatever that is that you're comfortable risking per trade. And you might say, maybe you risk 1% of your account or 0.5% or 2%. For me, 544 or so would be 1% of the balance in this demonstration account. So here I say I'm risking 650. So now I'm starting to zero in on my trade size. And so right there is a little bit less than 1% of my account, risking about 518 to make over 750, 760 or so. So if I like that risk reward setup and I like the technical setup, I'm in the direction of the technical signal from Trading Central. I've done my own technical analysis, seeing that I should have support here. So I've put my stop loss below this level. And if it does break below there, then the technical trend is a downtrend at that point. And why would I continue to buy then if I'm trading off of the technical movement? This is why I have my stop loss at that spot. So I'm willing to take a small risk to go after a bit larger potential profit. It's in the direction of the signal from Trading Central, and maybe in the direction that the fundamental news, maybe you feel would push this as well. And if that's how you felt about the trade, then you'd go ahead and take a trade on something like this. So I've gone ahead and used the technical signal from Trading Central. Then I've evaluated the chart myself from a technical perspective. And before placing the trade, I'm also trying to line that up with, does that directionality, in this case on gold, fit the current fundamental situation as well? Or are the fundamentals at least neutral, not working against me? And I feel like maybe the fundamentals are in favor of this technical signal. So then it makes sense in my strategy as I set that up that, yeah, I'll follow this signal from Trading Central, okay? And that's how I would suggest you use the technical signals that come into our platform and our app, is don't just blindly follow them. Get an idea of what the sentiment is for the day. What are the big headlines, the big storylines, whether they're economic announcements that came, like the bad jobs data out of the US, headlines about Iran rejecting the nuclear deal, headlines about, nervousness about tariffs today. And once you put the tea leaves together, so to speak, then you see if that matches up with the technical signal as well, and maybe you feel better about the signal and follow it, or maybe the news works against, in your mind, what the technical signal is saying to do, and so maybe you sit that signal out then, and you don't follow that signal. So in this case, we went ahead with gold. We followed the signal from Trading Central because it seemed to make sense with the fundamentals. And we also didn't just trust the technicals from Trading Central, although they're typically very good. The support resistance levels within the signal that we looked at, which is here, okay? But we drew our own lines and looked at, where is the resistance level up higher, because we couldn't see that here. And we saw that indeed there was a resistance level just $1 or $1.50 above where they're saying to take profit. So then the signal made even more sense once we looked at the chart with, say, 4-hour candles to get a bigger view. Okay, so just some methodologies that you can use as you utilize the technical signals coming into the platform. Okay, we could take a look at something different. And by the way, don't be afraid to suggest an instrument if you'd like to look at something. As long as we've looked at one signal, we could take a look at another. We've gone with a commodity. Maybe we go with a major index of some kind. Since the U.S. jobs data was what came out a bit negative today, let's take a look and see maybe what's happening with the U.S. 500 or one of the major U.S. indices. So as we look at the U.S. 500, we see there's a signal for that as well. Looks like the optimism about potential trade deals coming out today has outweighed the negativity of the jobs data in terms of this signal. The prediction was this would climb. What I see is it's having trouble climbing. It tried to go up and it's pushing right back down with momentum. And I would say this is a reason why maybe as I look at the fundamentals, I wouldn't follow this signal. Why would I not follow this signal? Because there are things out there that are creating fear that are working against this signal. There's fear about a rejected nuclear deal. There's fear about bad jobs data out of the U.S. and what Friday's non-farm payroll might show. And there's a bit of apprehension about, sure, there's optimism that there might be some trade deals, but they haven't been announced yet. So those things are kind of working against having momentum for the US 500 to carry up into this take profit zone that the technicals showed might occur. And I would tell you, if we pull up the chart like we did for gold and look at a bigger view, we'll see that there are resistance levels somewhere in this area on the larger candlesticks. And that's why they suggest to take profit in this zone, because if indeed it did go up, it might find resistance, technically speaking, up in this zone. But because I feel the fundamentals maybe are working against me, if I try to go with this buy signal, this is one I would probably sit out. Not to mention that the current technical movement is down and not up, right? It's trending down pretty hard the last several candles, looking like it's breaking smaller support levels right now, heading towards this support level. And I would even say, if I was going to trade on this, I might put a pending order below this pivot level, which is the support level, and put a pending order to sell. If it breaks this support level, that confirms a downtrend, and a pending order down here to sell would kick in with take profits down towards these suggested support levels down here. Okay, and that's what it tells you. There is a sell scenario and a buy scenario in each signal. So I'm looking at the sell scenario because I think the fundamentals support that technical move as I see a downtrend occurring. And so if this gets below 59.67, which is the pivot line, they say look for further downside. Then it's a sell signal. So I would probably be more comfortable with the sell with a pending order here, more so than I would with the buy. Okay, and so if I was going to set that up, and by the way, you don't have to trade on it. If I had to choose one, I would probably choose a pending order sell here with the sell side of this signal, waiting for a confirmatory breakthrough of that pivot line. My number one choice would be probably to sit it out because there's mixed signals here. Okay, the original signal's a buy. There is some optimism about potential trade deals, but fear about potential war escalation and other things. So I feel like there's a tug of war back and forth with this signal, and I probably would sit it out. If you were going to sell on this, you might set, as I suggested, a pending order that if the move goes below that support level, then you enter. And and what I should have done, if I bring the signal back up, okay, 59.67 is where that pivot line is. So that is right here. Okay, 59.67, right about here, just below this little support area here. Okay, so now I can go ahead and say sell and execute when price hits. If it drops below 59.67, so let's say 59, I'll draw another line. If it comes down here and drops below this little support level, this was old resistance and down, and here resistance and down, and then it broke through that resistance with a breakthrough candle here. Classic breakthrough candle. So there was resistance here, and it took momentum to get back up here. So if it does come down and break back below here, since it took momentum to get above it, if it breaks below, you may see momentum on the other direction. So a lot of times what happens with these breakthrough candles, it takes momentum to get above the resistance. It will act as support here potentially, and if it breaks below, you might see momentum the other way. So if it gets below 59.56, so let's say 59.50, perhaps you're looking for further downside. So execute when price hits 59.50. That really, it should say if the price hits, right? Not when the price hits. Execute if the price hits our strike price here, trigger price at 59.50, then it would sell. Okay. Now, where would my take profit be? If it has that much momentum to break down like that, perhaps it could carry down to the next support level, which I see down around 5,900, maybe a little above 5,905, 5,910. So I see this was an old support where it bounced up here. Okay, this was an old support here where it had trouble staying below this price and went up here and again here, and it took momentum to get below that price. So I might take profit around 5,900, 5,905. So it wouldn't have to break that support level. So if I go 5,905 for a take profit, stop loss, if it breaks this support and enters at 5,950, then if it's a true breakthrough with momentum, it shouldn't go back up to 5,970, which would be back above this broken support. So if it does go back up there, then it was a false breakthrough or it was weak momentum. So 5,970 might make sense back up here with the stop loss if you do trigger the pending sell order. So stop loss 5,970. Okay, so now I'm risking about half, less than half of the potential profit. So I could start to say, you know what, I can be even more patient with my stop loss. I'll go 5,975. That would allow it to even come back up near where the price is now, 5,980, 5,975, before it would hit the stop loss. And then I'm still near 2-to-1 potential profit compared to risk. Okay, so now that I've got my risk reward ratio set up, and that's based off of the technical analysis that we're seeing with my stop loss, my entry price then is down here, 5,950, and my stop loss is back up here at 5,975. Okay, so if it comes down and triggers my sell, my take profits here, my stop loss is back up this direction. Okay, so if I'm happy with that setup, then now I just need to adjust my trade size to be the amount of risk that I'm comfortable with. So if I do a quarter of a lot, I'm looking at 625 possible loss, almost double that in profit. If I, again, want to be around a certain number, and I made up a number of 500, or maybe around 1% of my account, I just adjust the trade size now until I get to the number that makes sense for me. 550, that's almost exactly 1% of my account, slightly above. So maybe I'm happy with that number. Possible profit almost 1,000, risking 550. Okay, and I can zero in even closer if I want, 0.21. Okay, now I'm just under 1%, still near 1,000 potential profit. Okay, so I've got that set up. If I'm happy with that setup, then I click sell. Now you'll notice that comes up here as an order and not as a position. Why? Because that's a pending order. This will only open if this starts breaking support levels here and hits our trigger price. Then it'll open as a sell. And we've strategically put it there because that would confirm a downtrend from a technical perspective. It would be breaking this support level and below this old resistance level as well to trigger that trade. And then we'd be hoping for continued momentum down, just like these movements had momentum up when they went above that price, or down when they dropped below that price in the past. You're hoping to see the same thing if it triggers this trade as a sell. Okay, so we've got one trade, gold, that's trying to climb with what maybe we deem as potential fear right now in the markets a bit, and a pending order that we're waiting to see if it will trigger, only if it confirms a technical downtrend with what maybe we're thinking is potential fear. So in one case, we used the primary signal from Trading Central with gold to find our price levels and to buy with the buy signal. In the other one, we did not follow the primary signal, which was a buy on the US 500. We took a look at the backup signal and used the price levels from the signal to say, okay, if it drops below the pivot line in the signal, in this case on the US 500, then we'll go with the sell scenario within that signal from Trading Central. And that decision making on to go with the live buy signal on gold, but not to do that on the US 500 is directly tied to our evaluation of what's going on fundamentally as well today. So you see we're using fundamentals maybe to pick directionality a bit, but then also seeing if the technical analysis confirms what we're thinking with the current trend, and also seeing where are the support resistance levels on the chart as well. And because this US 500 was downtrending on the smaller candles and appears to be trying to break a support level, the buy signal from a technical perspective didn't make sense. But then we pair that with bad jobs numbers out of the US, and some fear about that, that maybe there's more negative going on here than positive, and so going against that signal on the US 500. Okay, and obviously we can be wrong on any one trade, so we're making sure the risk management side of things is taken care of as well. And this platform obviously helps you with the risk management side because you're able to set things up in the order window and see your risk and reward before you ever place the trade. Okay, I'll pause for a moment. Any questions, comments before maybe we look at one more instrument? And if I see any questions pop up as I'm going along, I'll address them as I see them. Okay, so we can take a look maybe at some currencies or a currency pair, which is about what we have time for. Something that might make sense with what's going on fundamentally, and to look at the technicals and see what's happening. So, bad jobs numbers out of the US, that could weaken the US dollar, right? Maybe there's more anticipation, hey, if the jobs market is going bad in the US, maybe they're more likely to lower interest rates. There's probably some of that thinking going on right now, and that type of thinking could weaken the USD a bit. And if there's fear out there, we'd probably pair the USD against something. If we feel the USD might weaken, you would probably pair the USD against something that you think has reason to strengthen. The Japanese yen tends to strengthen when there's fear because it's kind of referred to as a safe haven currency. So if we feel that the USD has reason to weaken, then we should pair that against something that you might feel has reason to strengthen. And so maybe that's the yen. So if we say USD JPY as the pairing, then let's see if there's a signal. First of all, USD JPY indeed does have a signal. So we'll look at this and see, is the USD dropping? It is dropping. And is it expected to drop? It is. It's a sell signal. So many times when you start to think about rationality fundamentally, before you look at the chart, you can predict the direction that the signal might be and that the movement might be moving. And indeed, we were right here, right? We kind of predicted that the USD had reason to weaken, that the yen has reason to strengthen, and maybe there'd be a downward movement. We pull up the chart and the signal, and we see, yeah, USD is dropping against the yen, there's a sell signal. So everything's in alignment here from the technicals and the fundamentals. And so when you can start to do that before you even look at the chart, think about what's the sentiment of the day, what are the big headlines from a fundamental perspective, and you can almost predict what the technical signal will be or what it should be and what the movement will look like on the chart, and then you look and you're right, then you're starting to learn how to pair the fundamentals with your technical analysis and predictions. Okay, so as we look at this chart, we see maybe we're a couple hours late. Indeed, these headlines were there all day, by the way. It's not something that just happened in the last 2 hours. The Iranian rejection of the nuclear deal, the bad jobs data out of the US, we knew that the past 3, 4, 5 hours. Okay, so if you look at this chart and go back 3 or 4 or 5 hours, you certainly could have seen from a technical perspective that this support level got broken on the 4-hour candles right here. Okay, go back 1 4-hour candle, and here's the downtrend breaking the support level. And once it broke that support, look at the momentum, look at the breakthrough candle as I showed on the other chart. When support and resistance levels get broken, usually it's for a reason. There's some kind of large news causing that momentum. And so it broke the support level, and there's the momentum. That's what I call a true breakthrough candle. And a pending order below the support level would have caught that, and down went the US dollar against the yen. Okay, it was kind of the perfect storm of headlines today fundamentally to cause this great technical breakthrough and movement. And the signal has been dead on. Dropping from this pivot line up here, once it got below that pivot and tested it once, down it went, okay? And it hasn't reached the take profit zone yet. So according to the signal, we've got further dropping. I see a support level coming soon right here, okay? 142.37. The next support level down is here, 142.12, okay? The signal here says 142 even and even lower. So we need to look at larger candles to see what support level is down here. So let's go to 1-day candles, and this is where the signal is helping us, because we had 4-hour candles and we don't see that there's a support level that far down until we go to 1-day candles. So here are the 1-day candles, and here's the support I see that's closer. If you're scalping, I'm probably out right here on this support. If you feel like the fear is just getting going and this might keep pushing, then we start to see why Trading Central says the support is at 142 even or even lower, because you see down here 142 is this support level here. Let me delete some of these lines. We'll get rid of the short-term one that I drew. And now we see over here a support level on the 1-day candles from this wick here, where it hit and bounced, tested and bounced, tested this area and either went below it or came right back above it. And then it became support again on the 1-day candles. Look how many days it sat on this price. 1 day up, 2 days up, 3rd day bounced off that price. Again, got near this price and went back up. Same thing here, got near this price and went back up. That's 142 even. Okay, so Trading Central thinks this momentum could carry to 142 even, which is this support level here, or even lower to 141.50, which is here, this area, which is this support level here. Okay, so somewhere between this zone, I'd probably be looking at 142 and happy if I hit that price at that support level if I was selling on this. Okay, so this is where you can see that your own technical analysis, I did first on the 4-hour candles, and it looked like maybe I want to take profit sooner than 142 even. When I look at the signal, I say, okay, maybe I need to investigate larger candles because Trading Central is showing the take profit at 142, and indeed I see on the 1-day candles that there's a more major support level at 142 even down here, okay, on the 1-day candle. So maybe you do a partial close at the support level that I drew here off the 4-hour candles. We've got support at 142.45 or so. If it gets there, maybe you do a partial close, and if it bounces back up, okay. If it continues to drop, then you close the rest of the trade at this next support level down on the 1-day candles. So you can start to look at the signal and see, wow, that's a strong downtrend, and I've got room to go before the take profit zone. So this is something you could do a market sell on, okay? And you know, when we go to say 15-minute candles, we see, wow, that is a strong downtrend. It's continuing to drop as I'm talking. It's dropping, okay? So very strong signal, and it was very easy to predict that that might be happening because we said there's reason for the USD to weaken and reason for the yen to strengthen, okay? So that's something I would have been more comfortable to sell on a few hours ago. And again, the news was the same. We already knew 3-4 hours ago there was reason for the yen to strengthen and the USD to weaken. And that signal's been there for a few hours as well. So that would have been an easy one, and I would have probably jumped right on it a few hours ago. But that's why you should peruse through these signals throughout the day, and you'll find signals that maybe match perfectly what you think the fundamental news is saying should happen as well. And if from a technical perspective it looks like this, then it's an easy trade. You'd have had an easy win on this trade if you checked that signal out 3-4 hours ago. It's not to say it's too late to sell on it. It's still downtrending and hasn't reached those support levels yet. Yeah, we can take a look at crude oil real quick. Let's look. Crude oil was requested. You know, when there's bad jobs data, signs of a slowing economy in the U.S., if that's what bad jobs data might tell you, makes sense. Crude oil could push down. That's what I see is crude oil pushing down for the last several hours. In general, the economic data out of the U.S. has been pretty strong, though. So, you know, crude oil is tricky because it looks at a lot of things. Tension in the Middle East, war drums beating maybe with Iran rejecting the nuclear offer from the U.S. and the threats that the Trump administration has made about that to Iran, not to mention the tensions with Israel and Iran. Those headlines are reason maybe for crude oil to go up, because the Middle East is a place where a lot of oil comes from, and if those supply lanes and routes get cut off because of war, or delayed because of war, there's reason that crude oil could bounce back up. So I feel like today the fundamentals have competing interests with crude oil price. The fear about war, that could spike crude oil up. Fears about bad job numbers in the U.S., that could bring crude oil down. And if a trade deal is announced, then that could create positive momentum about economies, and crude oil could spike back up for that reason as well. So I feel like this is a mixed signal from a fundamental perspective with crude oil. So you almost have to go purely technical, and I would feel like I want to find my entry point and my exit point where I can get in and out before the news changes, if I'm more of a short-term type trader, because we're waiting on headlines about tariff deals, as we speak. There's supposedly news coming today. So I'd be careful with longer-term positions on crude oil if your stop loss is too close, because you could get a spike either way on this. It'll be interesting to see what the signal is on crude oil. It's a sell. It doesn't surprise me after the bad jobs data that there's a downtrend. And so it actually just touched the take profit zone here. You see here, and as we've analyzed charts, we understand that these take profit zones, the reason the signal says take profit here is because there's a support level somewhere further back on the chart. If we look at the one-day candles on crude oil, we'll probably find a support level, and that's why they're saying take profit here. And so when this dropped, it bounced off that support level, and that's why they said maybe you want to take profit if it reaches that price. Okay, so I think this movement carried out already. This signal was already a winning signal, already hit the take profit zone around 62. It dipped into it just a hair and bounced right back up. This bounce tells me that there's a nice support level here, that it might have trouble breaking below this price unless there's further bad news. Okay, if the trade deals go bad and there's more threats about tariffs, that could create fear economically and bring crude oil down maybe. That might be enough to break this support level and come down to the next support level down here. But right now, barring any headlines like that, the technical move already carried out. Why do I say that? It already broke the support levels. It already carried down with the bad jobs data, and it already hit the first support level and bounced. Now you've got secondary moves after the bounce. So this signal, for me, the main move is done. And now it's waiting to see, okay, it's consolidating, and maybe it'll test again, maybe it won't. Okay, so I feel like this signal's kind of done. And I would probably sit it out, barring new information from a fundamental side. Okay, I think it's a good place to stop. We had a good variety of signals. We looked at one that was ready to trade right now from my perspective, not necessarily from your perspective, but it's the process that's important. Look at the fundamental news, you evaluate it the way you think, and then combine that with the technicals and decide whether that signal is good for you or not. So one of them, we decided within the simulation that it was good right then. One of them we think looked good, but only if it goes a certain way, so we put a pending order. And the other looks like it already carried out in actuality. It was already a winning signal. Interesting to have that variety within the three signals we looked at. And that's what sometimes I have clients complain, I trade the signals and they don't win, or they lose as much as they win. And I ask, are you combining the signals with any other information? Are you looking at the recent news? Are you looking at the recent economic announcements, etc., before you make a decision on that signal? And usually they're not. And so once you start to add in some extra steps with these technical signals like we did today, I think you should find better success in the end with your profit and loss and your win percentages when following the technical signals. Okay. All right, everybody. Thank you for joining. I wish you good luck with your trading the rest of today and the rest of the week. And I'll be back at it with another session next Wednesday is my next webinar, same session as this evening. Tomorrow's webinar, I'm out of the office, so I won't be doing the Thursday session for the fundamental analysis webinar that I typically do on Thursdays, but I'll be back doing that next week. All right, everybody, thank you for joining. Bye for now.